Welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker. 419-794-3030 is the phone number. The website is arhq.com. Don't forget, if you missed the first half of the show or previous editions of the show, you just want to catch up, all available on podcast, on YouTube, wherever you consume your media. Just search for America's Retirement Headquarters there. All the previous episodes there for you to digest at your leisure. Back in 2015, Oprah Winfrey made headlines when she bought a 10% stake in Weight Watchers and was appointed to the company's board of directors. But Winfrey says she's stepping down in May after revealing, well, she took a weight loss drug. What about her $18 million in Weight Watchers stock? She's donating it all to charity, and in the process, she's actually going to get a big tax break. That is definitely turning lemons into lemonade. What are some other tax strategies that could do the same, Nolan?
Well, there's 25 of them that we go through on our tax savers checklist, and that ultimately results in creating a 2024 tax roadmap. So I know many of you listeners right now are gathering your paperwork, getting things ready. Maybe you've already met with your accountant and you're saying, I'm done for the year, but you're done recording history when you get your taxes done. What we're talking about here is we're talking about, taking a proactive approach to trying to minimize the taxes that you pay in 2024 for the future, and ultimately for what money is left to your loved ones. And the way to do that is to sit down with me and go through the 25-point tax savers checklist, and also get a 2024 tax roadmap. So if you're a listener to the podcast, the YouTube channel, or on WSPD radio, and you want to take advantage of this, just reach out to us. Again, arhq.com is the website, or give me a call at 419-794-3030 and say, Nolan, I want my 2024 tax roadmap because I want to go through that checklist, because it is not your constitutional duty to pay one more dollar to the government than what is called your fair share. And so looking at these strategies can make a big, big difference. And so if I go through and I take a look at them, and there's a couple of them that jump out to me. Number one would be looking at a strategy known as Roth conversions. So last week I had met with a couple that were recently retired. These retirees, they actually inherited some decent money from a loved one, and their family left them a portion of money that was considered after tax, meaning that they could use that money to dip into now that they're retired and use it to fund their lifestyle. Besides reporting maybe a little bit of profits or a little bit of interest and dividend income that investment account generated, it wasn't really a big tax hit to take money out of that account. So in essence, what they were doing is they were living off of Social Security and a little bit of taxable reportable income. And what I had said to them is, I said, well, if you look over here, your big nest egg of money that you have is in these tax-deferred retirement accounts. And with these tax-deferred retirement accounts, you're going to have to pay taxes at some point in the future when you begin to take things like required minimum distributions, or when you take a withdrawal out. And that is when you would pay the taxes at what the future tax rate is. And based upon the out-of-control spending that the government has had, I believe that tax rates will be significantly higher in the future. And so what you could do is you could look at a strategy called a Roth conversion. And with a Roth conversion, what you're doing is you're taking a portion of that tax-deferred account, converting it over. In the year that you convert it over, that's when the taxes are paid on that account, moving it over into what could potentially be a tax-free Roth IRA. Again, to meet the definition of that, generally speaking, you have to have the account open for 5 years or longer and be over 59 before you access your profits. But in exchange for that, that money then continues to go tax-free for you and your family in the future. And so an incredible strategy to help keep the government away from you and your money. If you haven't had a 2024 tax Roth conversion analysis done, that is part of what we do in that tax roadmap. So again, that's something that if you want to take advantage of how to pay taxes and the minimum amount now and in the future, that tax roadmap is right for you. Number 3, I mentioned the word required minimum distribution. So some of you that are listening are at the age where you're forced to take money out of your retirement account in what is known RMDs. Those RMDs have you take money out of your account. There's 2 things that I want you to look at. Number 1 is if you are charitable minded. So if you go to church and you tithe, or if there's a charitable organization that is important to you that you donate money to, you could be much better off making that donation of your required minimum distribution directly to the charity, because if structured correctly, not only could it satisfy the required minimum distribution, that RMD could stay off of your personal tax return, thus lowering your individual tax rate. And number three is, a charity typically doesn't pay taxes on money that they receive, so that gives 100% of the money to go to work. The other thing to think about is if you're a required minimum distribution age and maybe you have other thoughts about charities and donations, or maybe your RMD is a little bit larger than what you want to give, but maybe you're looking at an investment that you love. So maybe your retirement account is invested in some stock that's been important to you over your lifetime. You don't really want to liquidate that stock to take it out. What you can do is you can take a look at getting your RMD done by not liquidating the shares, but having the shares transferred out of your retirement account. You move them over into individual account, and especially do that with shares that you think are likely to be higher in price in the future. A terrible time to take out and sell stocks is when the market's temporarily down and you expect those accounts to be worth more in the future. So, those in-kind RMD distributions or using charitable distributions is something else, again, that we can talk about as far as the 25-point checklist on that tax savers checklist. And the third one is looking at tax loss harvesting. So, tax loss harvesting is looking at your non-retirement accounts and doing that towards the end of the year. What it's looking at is it's looking at the investments that were realized, that were sold, that you either made a profit or had a loss on, and kind of comparing that together. What you don't want to do is you don't want to get a surprise after the year is over, because once December 31st happens, you're kind of locked into your tax loss reporting and reporting what your capital gains are going to be for that year. And tax loss harvesting, if done correctly, could help offset those gains, potentially lowering your capital gains income taxes. And in certain situations, it could make sense, if there's some losers in there, getting you in a situation where you could have, up to a $3,000 deduction. But there again, this is an area where I'm not a CPA. I work hand in hand with a CPA. I'm happy to work with you or your CPA in developing smart tax strategies. This is an area where the decisions that you make with your finances impact your taxes. So why not have all three of the people together making those smart decisions, the CPA or accountant, the financial advisor, and the client? That's exactly what we can do. And the first step is an easy step. It's picking up the phone, scheduling a time where we can go through the tax saver checklist. Let's talk about the 25 items on that checklist, see which of them apply to you, take that information, turn it into a 2024 tax roadmap, and then we'll get together and have a conversation with your accountant, or you can, talk to an accountant that we can recommend for you, and have somebody that is going to be the one preparing the taxes confirm that those big tax saving strategies might be the right approach for you.
Obviously, make sure that you pay your taxes for the coming year, in April, but also go ahead and start developing that plan, not just relying on history and paying back on that, but also develop a plan to mitigate and minimize the amount that you have to pay in the future. That starts with having that tax roadmap done. The team at America's Retirement Headquarters, happy to do that for you. Just reach out and give a call, schedule a time, and tell them you'd like that tax roadmap. 419-794-3030. You can also drop them a line on the website, and that is arhq.com.